Now is a different time. We take a breath, and where do we stand now that the Fed's actually cutting for the first time in 4 years?
I think we're starting to see consumer confidence coming back some. We had that 0.5 point rate cut. We're expecting another 0.5 point in November. So, rates are starting to come under 6%. So it's not that it affects the mortgage rate or the mortgage payment that much, but it affects the mindset of the consumer. And so I feel like they feel like things are heading in a good direction. And so we're seeing a lot more people starting to jump back in the market.
Right. I mean, it certainly will affect, on your monthly amount that you pay. It's going to affect something.
Yeah.
And it's that trigger point. At what point do people say, now I want it? It was six, and then people now are saying 5 or 4. Not likely to see below 5 anytime soon. But I think 6 was a breaking point. When it went below 6, did you start to see more interest?
We did. Our showings, I've got a real estate team of over 1,000 agents across the country. Our showings have quadrupled in the last 2 weeks. And a lot of it is just consumers knowing it's time now to get back in the market. They better get in the game now. And they better start looking to, what homes they're looking for, maybe potentially selling their home, because, the feds have said that they'll do another rate cut in November, and that should bring us down to probably 5.75.
Yeah. Look, the 50 versus 25 in November is up for grabs. Right now, the tools are pointing more towards the 25 basis points, but the market wants 50. So we'll leave that to the pros to decide what they will do on the committee to decide on that day at that time. But you have November and December, so most folks are thinking a couple of cuts. That being said, do you start to see, the question was, as mortgage rates came down, more people would come into the market and then the prices would go back up, and affordability has been an issue, right?
Right, exactly. And so that's what happens. We get into a supply and demand situation where right now we have more supply than we have demand. So the prices...
You do?
We do. I'm in Texas, and right now we have a 4 to 6 month supply on the ground. So what happens then is that prices come down. When the demand comes up, like what happened during COVID, then, now all of a sudden you have more people wanting less houses that are on the market, and that drives up prices. And then you couple that with lower interest rates, and it's Katie bar the doors.
But the big picture is the lower rate environment is good for a few reasons, not just housing, other things as well. What are the big picture that you're hearing and finding, whether it's loans?
Yeah, what I'm finding is, car loans are coming down, credit card rates are coming down, and all of that spurs consumer spending. And that's what's so important, to get our economy kickstarted and moving again. So, I've got a lot of friends. I used to be an auto dealer. I've got a lot of friends that are auto dealers, and they've seen some pickup in the last couple of weeks because they're able to offer their customers a lower rate also.
I can't believe you used to be an auto dealer.
You've
done everything.
I know.
How do people get financing? Because that was started to be an issue. When we had last year, we had the regional bank sort of crisis. I don't know what else you want to call it, last March.
Yeah.
And people started to get some jitters. They weren't able to get the same mortgages because it was a little more scrutiny on who's getting the loans and stuff. How's the financing going for folks?
I think there's still some scrutiny for sure. It's a little bit tougher today to get a mortgage loan or an automotive loan. The banks are still a little bit tighter with the purse strings. So, and I think consumers are still very nervous. They're nervous about the jobs market. They're nervous about the economy. So I think that we've got some evening out still to do. But I do believe it's heading in the right direction, and that's what we've all been hoping for.
What do you tell folks when they say they feel like we're in a recession?
I don't feel like we're in a recession. I feel like, there's been some normalization of the economy. I think back during COVID, auto dealers, there was not enough cars on the lot. So prices were, blown up greatly because of, supply chain issues. There were not enough houses on the market, so we got into multiple offers. So all I think we're seeing now is almost a normalizing of the market. But I won't lie, we got really spoiled during the last couple of years, in the real estate industry, in the mortgage industry, in the auto industry. And now I think things are just starting to level off.
Right. The days of 0% financing, remember that?
I do.
You talked about special financing. Can we just go back to that for a moment? Sure. I've never really done this, so I've never experienced this, but you're fully immersed and you're seeing and have color from the streets and what people are saying.
I do.
So how does this go here? Are people struggling? How are they getting getting the financing? Are they getting better rates, worse rates? Do they have to put up a lot in front? Do they have to put up more than usual up front?
You know, I don't know that the down payments have changed, but what's happened is, they're buying less car, they're buying less often because, the car that they bought in 2021 for the same price car today is going to cost them $100 more a month, $200 more a month, strictly because of the interest rate. Because to your point, the factories are not offering the subvented rates, the 0%, the 1.9%. It's just not available anymore. So it's definitely hindering the buying power of consumers, both for automotive and then, of course, we talked about mortgages.
Yeah, if you want to get this market really moving, I mean, you talked about 1,000 people under, sort of your umbrella.
Yeah.
What's your advice to buyers and sellers in this time now when we're expecting more rate cuts over the next, let's say, 6 months?
I would say get ready, because when it happens, if you're a seller and you're looking to put your house on the market, now is the time to start, right? Now is the time to get the house ready, call the realtor, get it listed, to be ready for, hopefully, some rate cuts. Because again, as soon as those rates start to drop dramatically, and if they happen back to back, we're going to get into a demand situation where there's going to be more demand than there is supply.
Right.
And it's hard to get to what the bottom of the market is or what the best rate is.
Right.
So I just say, now's the best time.